part two in my conversation with our current president, COO, Michael Del Clemente.
That's a major life event,
Yeah.
right?
Oh, yeah.
When you're sitting in a call center like I was at Bank of America, where I'm in a building with 600 of us and we're doing mortgages all over the country.
Right.
It wasn't disconnected, right? And we're here, we're local. There's about 35 people in the company. We only lend in Florida and Georgia, and the difference is that people really care.
Yeah. Well, you get more opportunities to be a little bit more personalized, which is a plus when it comes to probably one of the biggest transactions that people tend to do in their lives. But just to recap, number one, you have to love people, folks.
Yeah.
You got to pay attention to details. 3, you got to be, somewhat tech savvy and willing to evolve as technology does, because it just helps us. And then 4, you got to love to help. And I think we all get a good feeling from helping people. Now, I also want to ask you from the other side, maybe from the consumer side, what are 3 major keys that you see that affect people's ability to get approved that they don't probably necessarily think about?
Big 3 are probably, this can vary, but generally I'm going to say these are probably the very popular 3. Changing your income, changing your credit, and then providing documentation. I'll break those down a little bit further. When I say changing your credit, I mean, when you make a mortgage application, you get pre-qualified. Don't run up your credit cards. Don't go buy $10,000 of furniture. Don't finance a Lexus. There's a lot of things you can do that change your ability to your credit. And I'm not saying those would necessarily disqualify you, but it's going to cause delays, right? If you know you're going to be changing your jobs during the mortgage process, tell us up front. We can work. It's much easier to work around things that are known than finding out later when we do verifications. For example, within 10 days of closing, we're going to verify that you're still at your job. Well, if you're self-employed, that's different. But and if you're Social Security, that's different too. But if you're working for a company and you're W-2, which is the majority, we're going to verify that you're still there within 10 days of closing. We're going to check your credit again within 10 days of closing, make sure there wasn't anything substantially different, right? Okay. And then documentation. It's a lot easier. I've made an analogy like this before, right? So if I asked you for 12 months of bank statements, and if I asked you the day that you put a contract on a house, if I asked you for 12 months bank statements, you're probably gonna say, man, that's a lot, but okay, here you go, and you spend the night and you get it over to me. Yeah. What if I asked you the day before closing? How would you feel? Say these people are crazy. You're gonna think that we don't know what we're doing, right? Yeah. That's where I'm going back to attention to detail. The sooner in the process for us that we can give you a complete list is the better. We're using technology to leverage that to make sure that we're getting you full and complete list as soon as possible. But just understanding that we're not asking you for documentation because it's arbitrary or we feel good that we want to see it. Yeah. We're asking because we need it. Unfortunately, sometimes those do come later because we see something and that causes us to need something else. Okay. There's a lot of misunderstandings for that, right? Yeah. Hey, we need a copy of your bank statement. We get your bank statement a week later and there's a $20,000 deposit from a bank account. We can see that there's another bank account, but we don't have that bank statement. Right. Now we're going to ask for that bank statement, right? You can see the rabbit hole. My point is, if you understand why we're asking, and we're asking because we need it to finish your loan qualification, right? It's not random, and you'd be surprised how many people are resistant to give us things. So I'm just wondering, I heard you say something. Yeah.
Have you ever had an instance where somebody actually has bought like a Lexus or something in the middle?
Those were 2 real stories. Yeah. Yeah. $50,000. Yeah, I had the 2 examples that I gave you actually were real stories where the person ended up getting declined within 10 days of closing, and we could not give them the loan because they went out and got a $1,000 Lexus payment, and they no longer qualified for their mortgage anymore. And then the other one that was another real one. We had somebody go out and buy. I just didn't know they could get that expensive. Somebody bought a $10,000 Tempur-Pedic bed and financed it. And the payment on that made them no longer. Now, in that instance, we were able to get them to return the bed. Yeah. Anyway, but no, those were real stories, both of them. Now, one was probably 4 years ago, one was 10 years ago.
Just a question for you: did they say the reason why they decided to do that?
Just didn't understand. I mean, so I would say in both instances they did not understand. Um, I personally spoke to the person on the Lexus, and then I've heard indirect story from my loan originator on the other one. They just didn't know that. Well, first of all, they didn't know we were going to check the credit again. Right?
Right.
They thought once they were pre-qualified,
Right.
that was it. So I can tell you, we've made changes. For example, on every loan application, I've made it myself. We send out a notice in every loan application that you have to sign to acknowledge that you received it.
Yeah.
I explain exactly what I just told you
Yeah.
to every customer so that we try to avoid those problems, right? So we're not doing this as a gotcha. We're not doing it to we're making sure that you still qualify, right? A change, as a major change in your financial status could change your qualifications.
Okay. Well, awesome. Well, I'm glad that y'all are actually educating buyers on the importance of not changing your debt to income
Yeah,
ratio.
that's the real result. Yeah, yeah, exactly. Debt to income ratio.
All right, awesome. So, also, I like to be what we call myth busters.
Yep.
You know, I think everyone in the world seems to have a detective in them at times where they want to solve a problem,
Yeah.
or they want to do something. So, I do a little thing where I call it fact or fiction, and it could be something that people think maybe in the mortgage industry that's a fact that's really fiction, and then something that is people think that is fiction that really is a fact. So, in whatever order you want to do it, if you want to just give us something where you can kind of let us know that this is actually a fact and it's not fiction.
So I would say I'm going to start with the fiction.
Okay.
So a lot of people think that you have to have a large down payment.
Okay.
There's still a lot of people that think that you have to have 20% down.
Okay.
Honestly, it may be everybody's financial situation is different, and I'm not recommending that you use a low down payment loan, but that's not a barrier to entry. Okay. There are a lot of programs. There are first-time homeowner programs. There are state Florida housing programs that have down payment assistance. I'm going to say the fiction thing is that you have to have a lot of savings to qualify for a mortgage, and that's not necessarily the case.
Okay.
The fact I'm going to say is the converse to that is what's most important is that you have credit and income, and that income is steady income that gives you the ability to repay a mortgage, right? So credit, I don't mean excellent credit. I mean, maybe that's a myth, right? So you could have fair to good. I mean, there are programs with we offer programs that go down as low as on FHA loans down to a 580. We have down payment assistance programs starting at 640. So credit you don't have to have excellent credit. That's fair to good is where your starting point. But we also offer programs all the way up, right? The better your credit, the better the terms of your mortgage, right? So mortgages are all risk based, right? So the better your credit, and the bigger down payment, the lower the rate. Okay. The lower the down payment and the lower the credit, unfortunately, the higher the rate, but you're still getting the house. Right? Okay. So most people, and this is I don't want to make a complete generalization. Most people are financially better off in the long term the sooner you buy.
Okay. So I want to plug something in there.
Yeah.
If people have questions, or if they're doubting, if they're iffy about something, if they heard something, what do you think their best way to go about doing that is?
Yeah. If you have a realtor, I would ask for a realtor for a referral. Most realtors have a loan officer that they work with already. If you don't, or our website, our loan officers, there's a roster on our website where you can look people up. Every loan officer will have that preliminary conversation with you, right? So being a loan officer, it's not always about putting somebody in a home next month. Sometimes it's a 2-year plan, right? Okay. So the first step in the home buying journey is getting pre-qualified. Yeah. And unfortunately, not everybody gets pre-qualified. Yeah. But what you will walk away with from that conversation is, what do I need to do to get there? Right? Okay. So I'll give you a very quick example. On every loan application that we do, we provide to the loan officer a credit improvement plan. Right? We are not a credit reporting agency. We are not a credit improvement company, but we have a service that we use, and it'll say, hey, making up a scenario. Hey, if you pay off $1,000 in credit cards here, your credit score should go up to here, and you might qualify, right?
Right.
So we look at those things of more of a long term, and then hopefully we want to recapture that business when you come back around.
Okay.
But almost every loan officer, at least my company especially, they're not. It's not all. Only 1/3 of people.
Tune in to my next conversation with Michael Del Clemente, President and COO of Watson Mortgage.